is doing, more importantly, since the release of the non-farm payrolls jobs report for the month of October. It was worse than expected. The dollar, though, as you can see, higher against the Japanese currency by 0.2%. There's the euro, though, higher against the greenback by 0.1%. Not a whole lot of movement in the Forex market this morning, Asia side at least. Darius Kowalczyk is Chief Investment Strategist at SJS Markets, and he is joining us now from Hong Kong. It's good to see you there. What was your reaction to the payrolls report on Friday?
I think the report was really bad, and the market hasn't fully accounted for it. In particular, when you look at the survey of households, the number of job losses reported by actual people, not just companies, is really high. It's the third straight month that it is exceeding 500,000. And what really worries me is that there has been a marked deterioration in that number in the late summer, early fall, after a period of improvement that lasted through the spring and early summer. And this really raises question marks over when and how fast the consumer is able to improve. Definitely such numbers will delay any rate hike from the Fed and put downward pressure on the Treasury yields as well as the US dollar.
Darius, we were just looking at a board for the Aussie dollar, and it is still climbing against the greenback. These higher yielding, riskier currencies continue to do well in the environment that you just described. What's behind that?
I think that investors are realizing that the U.S. is accounting for a much lower share of the global economy than it used to. Currently about 23% versus 30% at the start of this decade. Also, Asian economies are exporting more to China these days than they are to the U.S. So the relative importance of the U.S. economy for our region is in decline. And Australia is really propped up also by its very unique, favorable fundamentals, strong growth. This year, 2% up in terms of GDP. Next year, 4% according to our forecasts. Interest rates will keep climbing at every RBA meeting through at least the middle of next year. So I think that the parity between the Aussie and the US dollar will definitely be reached sometime in the spring next year. And by the end of December, our forecast has recently been raised to 0.95.
So what's it going to take for a turnaround, a strengthening of the US dollar? Do you see that happening at any point in the foreseeable future?
Actually, the sort of scene for a recovery of the greenback is being gradually set, because as long as the Fed comes up and says that they will start raising interest rates in the near to medium term, at that point the greenback will recover. The question is when it is going to happen. I believe that we have to wait for strong Q4 GDP data for the Fed to decide that it's time to begin tightening monetary policy. So there will not be any major recovery in the greenback until, I think, the end of this year, maybe the beginning of next year. But after that, the greenback will lose its funding currency status. The Japanese yen will again have it, and then there will be a major recovery in the value of the dollar.
Darius, let's talk about what's going to happen this week. We've got the central bank in South Korea meeting. They're due out with the decision. Some think they're going to be the second central bank after the RBA to hike rates. What's your sense?
I think that India will be the second one in our region. Korea will be the third. And the reason for that is that there is so much political pressure from the Korean government on the Bank of Korea not to tighten policy just yet, that I just don't see them doing this this year. I think they will wait until the beginning of the first quarter. So probably some disappointment among investors who are betting on a hike in Korea. But the market in Asia this week will have a different key focus, which is Chinese data. And Chinese data, I think, will be stronger than expected. And this is likely to provide positive sentiment both for local currencies and local equity markets.
Okay, thank you so much for joining us today. That was Darius Kowalczyk joining us there. Hey, you're very welcome to talk about currencies. We're going to go for a break here on cash flow. We'll